everyone, and thanks for joining us today. On the agenda, outpacing the fraudsters, moving past the SMS-based one-time password, which unfortunately hasn't tripped up the fraudsters for all that long, with OTP scams now becoming increasingly convincing. Credit unions and banks in general are looking for new tools to authenticate users in real time. I'll have that conversation today with Dewald Nolte, the Chief Strategy Officer and co-founder of Entersekt, and John Ainsworth, the President and CEO of Bonifii. Thanks, Dewald. Thanks, John, for joining me today.
Great to be here. Thanks, Karen.
So let me start off with perhaps a little context to have the conversation today. It's probably fair to say, for better or for worse, that consumers have gotten used to what has become the familiar stutter step of the one-time password to access their accounts. It used to be hard. You used to have to memorize the 6-digit number. Now sometimes it's a little easier because the message stays on top of the screen on your phone. But it's an authentication tactic that fraudsters have become quite good at exploiting. How did that happen? Dewald, do you want to start us off?
Sure. Yeah, I think Karen, the long and the short of it comes down to, in technology, it really is an evolving field, right? Security. If you're in the security business, you have to evolve. It's fraudsters keep changing tactics. Fraud moves. Over time, you learn where vulnerabilities are for certain certain technologies or certain tactics. And if we look at the SMS one-time password, the reality of it is this technology hasn't changed in any meaningful way over the last, well, more than 2 decades now, right? It's pretty much in the late 1990s, the first time that this was used for banking. And so if you take that to into account, and you think about how technology evolves, think to 1990s, the smartphone wasn't even invented for another decade, pretty much, right? So from that perspective, the fraud vectors, the attack vectors, the tools for fraudsters to actually attack with has just advanced so much, and we just haven't kept up with with the way of protecting that. So SMS one-time passwords is something that worked well at the time, right? But the tools have now made it so easy. I saw a demonstration pretty much at a recent conference where a white hat hacker demonstrated how to set up a phishing site in less than 2 minutes.
Wow.
For that. And you kind of compound that with something like AI bots. You can get an AI bot to actually do phone calls on your behalf now, right? And have conversations on your behalf. So you can automate this whole thing at this stage and kind of sit back. So it's a good time to be in fraud, and I guess quite a profitable business at the moment. So I think we really have to acknowledge the fact that the world has moved on, and certainly we're fighting battles with gear that's more than 25 years old, right? And we have to evolve and equip our financial institutions with better technology to actually keep the consumers safe.
I would certainly agree with that. Yeah, you're right. I mean, it is, their tactics are not only effective, but they're effective because they're so convincing. And I think that because we're so used to doing business in this way, and we're so used to getting these prompts from our financial institutions, that you just do it. And I got one the other day from an issuer I don't even have an account with, and I was like, whoa, I don't even have an account with them. But you can imagine that someone who isn't really attuned to all of this would click on it because maybe they'd forgotten that they have an account with that particular bank. So I think you're right. It's the fraudsters are clever. But if I think about the efforts that financial institutions have tried to stay a step ahead of the fraudsters, I think the criticisms have always been they've taken a security first, not a user first approach to protecting the interest of the consumer, the merchant, the issuer. And I realize that striking that balance is complicated, particularly now that fraudsters are more clever and everything is moving so much online. But what does that better way look like? How do you get that right, security, user experience aligned so that everyone's interests are protected?
And I think this is something that is very a hot topic, right? And it's one of those things where probably there's a lot of opinions around that, right, in terms of how to really get that. But I think one of the biggest challenges that we have is the fact that if we look at how the industry is approaching this, it's as you mentioned, it's a FI centric approach versus a user centric approach, and this is something that I think if we can change that to enable or to involve the user kind of in that journey. There was a fraud executive of one of the banks that we spoke with, which had a fantastic way of mentioning or a fantastic term for this rather, where she mentioned that you kind of have to deputize the consumer in the fight against fraud, right? Kind of involve the consumer in that fight. And I think that is something that's really important. Now, John, I know that you've also got, we've chatted before, and I know that this is something that you've also got close to your heart, and so it's something that that's really important to kind of get that journey correct, right? To kind of get the user involved in that. So I was wondering whether, from your point of view, whether you've got some insights into that, just in terms of, from the credit union side, involving the user and kind of how that really helps.
Well, I think, Karen, your point was a fair one in terms of, if you look at the dollars spent and, let's say $10 on cybersecurity, you've probably got a good $4 to $5 of that actually protecting the institution. You've got a good $4 protecting the actual transaction. Maybe you've got $1 or $2 actually focused on protecting the consumer. And so I think the balance in terms of security first versus user first is very, very appropriate. And I think that the one that comes back to my mind is actually around card alerts, because that's one that the industry has been very proud of. But if you look at the reality, so great, you sent me an alert that there may have been a suspicious transaction. Okay, now I, as the user, am the one that actually has to call my issuer. I have to report it for fraud. So my life is, still the same. And, so the technology, as opposed to being able to prevent that and allow me to be part of that journey, I think that's what we're trying to address is, hey, don't tell me after the fact. The technology should support that from a user experience before that actually happens. And that makes my life a lot easier,
But how do you do that? How do you create the context so that in real time there is this ability to understand the behavior of the user and make those, use technology to make those judgments and decisions, and only, push out something in the event that there's something quite different. But technology does a good job of alerting or being able to get it right more times than it has to elevate the exception to the consumer.
Well, you want to go first, and then
sure.
Then I can talk about the real life application of it.
Yeah, absolutely. And I think so Karen, if what John just said there is quite a important, and I knew he had the story, which is kind of why I wanted him to tell that story, because I think if you look at the user's journey, right, when you have that fraud first approach where you're kind of just looking at it from the FI point of view to say, hey, we want to remove the friction. That's always the justification. Hey, let's remove the friction from the user journey. But in reality, what happens is that you're just moving the friction, right? Because it's either there's a little bit of friction where I have control and I have comfort in that I can actually get that fraud prevention alert to me to say, hey, someone's trying to spend some money on your account. Is this you? Are you doing this? Which is considered to be friction, by some institutions. Sure. But I guess what we're finding is that users actually like that control. So it's that friction versus the friction of having to get a alert after the fact, realizing, hey, I didn't do this, having to jump on a call the call center, tell them, hey, there's fraud, having to sit in that line and go through the whole process of actually getting the card canceled and reissued to you. And I mean, so if you compare that, right, a step-up authentication versus a chargeback as an example, right?
Right.
You're just moving the friction down the line. It's going to be somewhere. And so I think if you look at that, a modern authentication solution, kind of getting back to this, how do you actually do it? A modern authentication solution needs to be able to have visibility across channels and, have real-time capabilities to actually look at things like, has there been a SIM swap, for example? Is the behavior of this user consistent with what I've seen before? Is the device's reputation, consistent with what I would expect from it? All of that, taking that into account, and then also taking into account user preference, because I think when it comes to user experience, it's such a personal thing. What is a good experience? If you look at how, I always use this example, if you look at how you set up your phone and how I set up my phone, I can guarantee you it's going to look completely different, because the way that I perceive that layout or that user experience is going to be different than yours. And so bringing in user or consumer choice or preference is actually then also very, very important. So if you look at that, if you have a authentication system that actually has visibility across your different channels and can take that context in real time and look at the user's journey and then make a decision based on the risk signals and the context of that user journey about, hey, should I step up here, or is there enough for me here to actually just let it go through? And I think that's the part where we're quite excited. That's something that we've kind of been investing a lot in, to kind of bring that reality to the financial services industry. And I think that's how you actually equip them with this modern tool set to fight the latest fraud, right? Because now you've got visibility across channels. You can see, hey, if something's happening on the online channel, maybe somewhere in on the West Coast, but the authentication comes from the East Coast. Hey, maybe something's a bit weird here, right? Because you have that visibility across it. So that context really then allows you to make the right decisions and actually protect the user. And so I think that's really what we refer to as context-aware authentication, and that really enables you to actually protect the entire user journey by looking at those signals and taking into account the user's preferences to really make sure that, first of all, the security is intact, and second of all, you can create a user experience that is really good for the user, taking into account their actual preference.
I want to talk about the ecosystem of security in a minute, but John, I want to ask you a question. So we've been talking about this for a while. We know these things. We know that this is the better approach, and it should be doing this, and there should be that consistency. But what's been the hurdle to getting it deployed and creating this context-aware authentication opportunity for the entire ecosystem?
Well, I think at first it was because everybody was kind of doing their own thing with their own standards and applying their own version of the technology, right? So we didn't really have a common layer until the W3C kind of came in and say, hey, look, we've got to get this right. And so I think that's helped a lot, right? Because everybody can interact with everybody's APIs. And, a decade ago, that just wasn't possible. And so I think that gives a lot better opportunity, at least, to have the participants talk in the same language in the same format, which nobody seems to appreciate that until you try to do it, and then you realize it's more difficult. I think that's one. I think the other is the appreciation that it's not just one tech anymore, right? So if you look at what DeWalt's referring to as contextual awareness, we've got decentralization in there, we've got biometrics in there, we've got cryptography in there. So there's a lot of this I call Rubik's Cube deployment. So taking that approach, but I think the common standard integration is really one of the things that enabled it. And then again, we all agree we should fight fraud, right? So if you look at that, I think we all agree that's one area we can collaborate more on. Some of the others are a little more difficult.
But when you get specific to actually taking what's available, building on top of the standard, and actually getting it, inside of a credit union to make available to, its account, its card holders.
Right.
What does that look like?
So on the user experience, it simply looks like, are you doing? Are you in the branch? Are you in the contact center? Are you at the ITM? Are you making a payment? And it's personalized to that experience. So I, as a user, don't need to know, what's underneath the sauce or the technologies. But for user experience, it says, are you in the branch? And if I'm not, I hit no, and that stops. The whole thing is stopped. So that's what we meant before the transaction. Are you making a payment? No. So for me, it really is just that control. Am I doing this or am I not doing this? And, again, the user experience is always where the adoption challenge lies, right? And so from that, that's ultimately what it looks like. Now, underneath all of the different connection points we have between the institution and the device, between the providers, there's a lot of spaghetti connections underneath them. But for me as a user, it's just, are you doing? And that's the most simplistic experience, right?
Well, what is the ecosystem that we're talking about here? Because if you think about the various stakeholders who all, have an interest in getting this right, it's obviously the issuer, it's the merchant, it is the, of course, the consumer, the account holder, and then there are a lot of other parties that come into play to create this experience built on the standards and enable this new way of contextualizing authentication. The ecosystem is complex, but typically there's an intermediary that kind of pulls it all together. Who is that intermediary, and what do they need to do in order to make sure the ecosystem functions the way you describe it? Dewald, do you want to take that one?
Sure. Yeah, and so I think that's an interesting question in the sense that, depending from which viewpoint you look at it, they're probably different entities. So for example, if you're looking at it, let's say for e-commerce payment, right? Pulling that together, there's the network that kind of has something like 3D Secure, EMV3 Secure, kind of that kind of brings that this is a global standard, that the merchants comply to as well as the issuer complies to, and then there are vendors then that implement that and kind of make these two really talk to each other, and the card network kind of facilitates that bringing it together. And I think so from a payments point of view, you'd have the card associations kind of helping to pull that together, from making the different parts of the network speak to each other, right? I think that's one view of it, right? And so that's kind of when you're having an external party like a merchant, effecting a payment into a bank, for example. I think the other part of it is, if you look at just a financial institution itself, typically you have these three interfaces. I usually try to kind of simplify to that, to say you've got your digital channels as a financial institution, where you've got online, mobile, your call centers. This is where you're servicing your own clients under your own brand, right? Wells Fargo mobile app, online banking, etc. That's your one channel. You've got a payments channel. That's where your cards, your account based, all of that. So that's the second channel, where a third party is effecting a payment against a store of value for the consumer. And then the new one, I kind of call it the data channel, which is kind of for open finance, right? So that's where you've got an API that a third party can kind of hit that. So if you look at those three channels, you have different players in each of them, right? In the top one, you've got your digital banking provider, your core provider that typically sits there, maybe sometimes your IAM providers. In the middle one, you've got your card associations and your processors kind of sitting there. And then in the bottom one, you've got your Plaids of the world, right? So your API gateways kind of facilitating those. And I think the thing that we're seeing there is that across all those three channels, well, you've got different vendors playing this, you've got different experiences. So for a consumer, I'm getting different experiences.
Absolutely.
Depending on where I'm hitting, and I don't understand why, because it's a very technical thing. And so that's where vendors like Entersekt, for example, comes in to say, how do we make those three channels come into one platform, so that it's how do we bring it together so there's consistent experience across all of them? And that's really then how you achieve this context-aware authentication, because now you have a viewpoint across all those external facing channels, and you can actually orchestrate a really good consumer experience. And so that's practically how we've been doing that, is to say we have the plugins into the different, these different externally facing channels, and we can then create a consistent experience for the consumer across that. And that then covers, if it's a payment channel, that means we've got the hook into the card associations and so forth. And so that's kind of from a bank's point of view where we really kind of bring that together.
It's interesting. It is. I mean, fraud orchestration is kind of an interesting way to kind of think about that, authentication orchestration, because I think that's, looking at all those different channels within a financial institution. I think that's a great way to describe it. I'm sorry, John, you were going to say?
Well, I was just going to say, I think it's fascinating, having been the payments, 30 years, it's still the same four parties we're talking about. Right. It's still the same players, but I think the point, I spent most of my life running a switch, right? Whether it was Visa, MasterCard, you always had some intermediary in the switch. Right. Your question about the ecosystem is fascinating because now it's dimensional. The way I connect with those four parties is what has actually, I think, changed the game. And so for me, thinking about historically where it was linear between those four parties, now it's multidimensional and everybody's connecting with them. But at the same time, it's still the four parties in existence, right? So it's just a new version of a four-party model. Old is new, right? New is old.
Old is new, new is old. Obviously digital and, the blurring of the lines though between these channels, physical, digital, and then the experience that consumers want across those channels adds yet another dimension to the multidimensional model, which creates the complexity. When you think about it though from the consumer's perspective, I think, Dewald, you mentioned consistency. We've all had the inconsistencies of experience with one issuer versus another, at the point of sale or making a payment. And consumers, to your point, don't understand that. But how do we get to a place where, their top of wallet experience with their card, with their credit union relationship is consistent across all the channels they engage with? John, how does that look and what's required?
Well, I think first we should acknowledge we're not quite there yet, right? So in terms of what we talk about omnichannel and one experience, we're just now at the cusp where you can have that. But I would say where you look at the predominant engagement, right? So it used to be 80% was point of sale and 20% was digital. Now, arguably, it's the difference and it's inverted. So I think, again, that common experience with the device, because that's my new wallet, right? It's not a piece of plastic anymore. It's my digital device. So I think having that engagement on the device helps to have some of that continuity, as opposed to before where I wasn't sure what I was supposed to do with a chip and a pin, or what I was supposed to do with my phone, or what I was supposed to do with my PC. So I think that digital engagement is allowing us to have kind of a more consistent experience. And so, when I call the contact center, I don't have to answer, the date of my dog's birth kind of thing. And when I walk into the branch, I have to give a physical, ID and ITM, I got to scan a passport, right? So I think the consistency of that is, can I just have one device that allows me that kind of engagement? I think that point of common interaction is what's getting us across the continuum, but arguably we're still not quite there yet.
It's interesting though, because consumers have multiple devices, right? They have multiple devices that they're engaging, and soon they'll have many, many more. We have commerce now inside the car cockpit. We have voice activated speakers that are generating, transactions. And so, as we think about the devices, authenticating to a device, it's different devices. It's my iPad, my smartphone, my car, my speaker, my laptop. So there has to be, speaking of consistency, there's that consistency across, those many digital channels.
It's a great point. So we always in financial institutions get back to compliance at some part of the discussion, and so we always, talk about KYC or KYB. The circles now are KYM, like know your machine, or KYD, like know your device. And so I totally agree that the ecosystem of how I access financial transactions is expanding. But yet again, if we go back to some of the standardization and some of the application of the technologies, you may choose different channels, but there's ways to actually know and help you, right? So if you normally use your iPhone and all of a sudden, a $50,000 wire transfer comes through an iPad and it's not geographically where you normally live, right? Well, there's some intuitive things we can help you with that.
Right. But what is the roadmap? So it is complicated. And, for credit unions that are really trying to solve for this, to obviously protect all the relevant stakeholders. What does the roadmap look like? What's achievable? And how does that evolution from what needs to be done today to, as we evolve across devices and context to protect the user, the financial institution, and billers, merchants from being defrauded?
So I'll comment first, and Walt, maybe this will lead into kind of your roadmap. But for us, the immediate problem was fraud, right? So if you look, whether it's a Zelle transaction or other P2P transactions, I as a member consumer, I'm getting defrauded today, and the losses are not inconsequential, right? So for us, the immediate roadmap is how do we allow that friction to be engaged, but not in a more cumbersome way. So that's today, right? And I think for us, that roadmap, it's still, again, at the end of the journey, how am I protecting the wallet from becoming a victim of fraud, right? So, and I think that the devices and tools that come along, the wallet can speak to his roadmap. As you know, credit unions are not necessarily known for building their own technology or owning technology. The goal is to make sure that credit unions or community institutions can provide the same level of technology as a Citibank or an HSBC or Santander. So I'll let DeWalt comment on the roadmap, but for us, the roadmap goes back to how do I keep Karen from becoming a victim of fraud?
Before we go to DeWalt, let me just press on that a minute, because there are probably different thresholds for different types of transactions, right? So you need to be sensitive to that. So the $50,000 wire, that's an infrequent transaction probably, but there are a lot of other transactions that are in the normal course of payments or bill payment, paying merchants, opening accounts that, require a different, I guess, set of contextual behaviors and analysis to know whether or not that requires a step up or doesn't, because you don't want to step up everything.
Right. Well, so you're right. So every institution typically has kind of their approach to, where's the risk and reward for transaction and transaction type. I think what we're saying, though, is I now, as a member consumer, get to participate in setting those rules or engagement, right? So your rule may be, okay, $50,000 is the limit where I want to step up type of authentication. I may want to know if it's over $250 that I want some sort of step up authentication. So I think the engagement of how do I have that increased protection based on experience and transaction is fair. I think what we're saying, though, is the technologies allow for me as a consumer, as a member, to actually participate. So this, hey, it just happened, or, God forbid, I'm getting some high level of friction just because I want to balance inquiry, right? And so I think that's the technology enables. If I just want to balance inquiry, go in and press 4, you can authenticate me through that way. If I want to actually go in and access money through a branch, great, you can authenticate me that way. If I'm doing a wire transfer, the key is, though, it's frictionless and it's like less than 10 seconds, right? I don't have to wait 2 minutes or 5 minutes to actually engage.
So it's consumer directed, which I think is great, because consumers, you're right, consumers can set different preferences and they feel more involved in the process. And I think more secure, because that you've set your limits. And if there's something that is below those limits, it's okay. Above those limits, you have the ability to sort of step into all your thoughts on that and roadmap.
So yeah, I think, Karen, that is actually such a core principle, I think, in a context aware kind of, strategy when it comes to protecting the user. When we talk about what is a good user experience, what is friction, if you as a user choose, to John's example, to be involved for anything above $250, then if something comes through, and maybe there are a lot of them, that won't be friction for you because it's your own rule and you can change it, right? And so I think that is the one part that's really important when it comes to that. That's why I'm saying that consumer preference is really actually a big part of making sure that experience is good. But then kind of walking back a little bit and looking just a couple of things that was important about just the conversation that you and John had now is, I think what's happening in terms of really making consistent user journeys possible. I think these standards that are now becoming in place, right? I mean, the FIDO Alliance, W3C, these collaborations and the mass adoption of something like biometrics really is making this quite quite possible to have a consistent experience across, multiple channels. If you think about something like a digital wallet, right? So I can use my phone to pay. I can use for e-commerce, but also in brand, at the point of sale when I'm in store. And so that experience for me might actually be very similar, right? A biometric to kind of unlock, and then I tap, or if I check out with e-commerce, there's a biometric there, right? And so that consumer experience, at least to a big extent, is starting to kind of standardize. Now there are different, to your point, different devices, and many of them, and certainly, again, I think that's where the consumer's choice comes into play. But again, I think at least the standards are there to allow for consistent experiences across those devices. So I think that's one important point that I kind of just wanted to mention, which I think is exciting for me, right? Because those standards are really kind of where we need to go.
People are so used to biometrics now. They're used to Face ID. They're used to their thumbprint, and it's very natural, and it's not a friction. It's just a part of the access process. And so I think shifting more to that, which I realize is now easier because of the standard that's in place. It's taken a while to kind of get to the point where we are now that it can scale. I do think that that's a way to protect everyone, and in a way that consumers already have embraced the technology, like it, use it, and trust it.
Absolutely.
Well, okay, this was a great conversation. I think we have a roadmap. John, any final thoughts in terms of how credit unions are internalizing this journey and what they're doing to prepare for 2023 to get behind it?
Well, I think, as with anything, if it requires consumer awareness and education and change of behavior, you got to get ahead of that. And so I think what you see now is a lot of efforts around education of like, hey, there are tools and so forth. So it's not just you wake up one morning, it's like, wait, that's a very different experience. Where did that come from? And I do think your point about the kind of advent of seeing biometrics in other segments because of COVID has helped a lot, right? So the consumers, the members that are coming into it, they're not looking at this as, okay, it's so futuristic. And it is interesting. I know we've done some piloting around with the metaverse, right? So it's like, if I'm a gigantor and I have a digital twin, well, who knows that's evolved, right? And then how do you have that kind of authentication? So, I mean, that it's going to continue to evolve, right? So I think today it's, again, like, how do we have a business problem we're using it for? And fraud is definitely there, and it's only increasing. So I think everything, falls into that. And it's really interesting for me because we typically talk with the CTOs, right? That's always who we engage with. This is not an experience where the chief risk officer is right there, like, okay, how do I engage this, right?
Well, it's a great opportunity to satisfy everyone's requirements, the user experience, obviously the safety and soundness of the banking and payments ecosystem, and the opportunity to really develop new use cases that are secure using this technology as the foundation. Thanks, Dewald. Thanks, John, for your time and your great insights today. Look forward to the next conversation. Thank you.
Thank you very much, Karen.